Dear investors, hydrogen fuel cells, what once sounded like a distant and unrealistic technology, now stands as a tangible part of our energy future. As we move through the year 2025, in a world racing toward decarbonization, hydrogen fuel cells are no longer just speculative. Hydrogen-powered buses, trains, and ships are already in operation. The future is no longer coming. It has arrived. Among the companies that have spent decades developing hydrogen technology, Ballard Power Systems, headquartered in Burnaby, British Columbia, Canada, has long stood out. It is a tech-centric company known for designing and manufacturing polymer electrolyte membrane-based systems. But in recent quarters, this very company has displayed a series of irregular financial and strategic decisions that defy conventional investment logic and raise profound questions for shareholders. The first turning point came in late July 2025 when Ballard quietly announced a major strategic restructuring after the close of the NASDAQ market. Newly appointed CEO Marty Neese unveiled an aggressive plan to reshape the company's cost structure and product line. The strategy included a more than 30% reduction in annual operating expenses, simplification of the product portfolio, and a commitment to achieve positive cash flow by the end of 2027. On the surface, it sounded like a standard turnaround plan. But shortly afterward, the Q2 2025 earnings report revealed deep inconsistencies. The company recorded revenue of approximately $18 million, a slight increase year over year. However, it continued to operate at a negative gross margin of around 8% and remained unprofitable. And yet, despite the losses, Ballard reported holding over $550 million in cash and cash equivalents with no bank debt. This is highly unusual. Typically, companies with ongoing losses would require debt issuance, equity dilution, or asset sales to maintain liquidity. But Ballard reported none of those activities, yet maintained an immense cash reserve. That raises a critical question. Where did the money come from? To date, the company has not offered a detailed explanation. The second mystery involves a missing contract. In April 2024, Ballard announced what it called the largest contract in its history, a long-term supply agreement with European hydrogen bus manufacturer Solaris for up to 1,000 fuel cell engines. Deals of this magnitude typically appear in the order backlog immediately and are then converted into revenue over subsequent quarters. But in Q2 2025, instead of an increase, Ballard's order backlog declined by 7% to approximately $146 million. Not only was the Solaris contract absent from the backlog, but it also wasn't mentioned in the report at all. This silence is unusual. If the contract is still active, it should be reflected in the backlog. If it has been canceled, there should be a formal disclosure. The absence of either implies one of two possibilities. Either the contract was never as firm as it appeared, or it has quietly collapsed behind the scenes. Yet, the company has provided no clarity. Third, we must consider the Texas Gigafactory. Ballard announced plans to build a large-scale hydrogen fuel cell plant in Rockwall, Texas, supported by up to $94 million in tax credits and grants under the U.S. Inflation Reduction Act. But in the same breath, it stated that a final investment decision had not yet been made. This sequence is reversed from what would typically happen. Generally, companies decide on investments first and then secure government incentives afterward. Here, Ballard secured the incentives before confirming the investment. This raises the question, is the company pursuing capital projects as a way to access public funding rather than as an operational necessity? Finally, we must address Ballard's partnership with Weichai, the Chinese state-owned enterprise. In 2018, Weichai invested around $160 million in Ballard, acquiring a significant equity stake and establishing a joint venture to build a fuel cell production facility in Shandong. For years, this alliance was highlighted as a cornerstone of Ballard's Asian strategy, but in recent communications, mentions of Weichai have all but disappeared. Aside from the quiet replacement of a board member, there is no update on joint projects, sales, or factory activity. If this strategic partnership were still intact and productive, it would normally feature prominently in earnings releases and investor calls. Its complete absence suggests either that the partnership has cooled or has been quietly wound down. Again, investors are left in the dark. Altogether, Ballard's current position is one of contradiction. The company claims a leadership role in hydrogen fuel cell technology, yet its contracts vanish from reports, its capital projects remain uncommitted, its partnerships fade without explanation, and its massive cash balance defies basic financial logic. Technology certainly exists, but is it truly the center of Ballard's business today, or has the narrative itself become the product? As investors, we are left to decide whether we're backing a fuel cell manufacturer or a well-constructed story of one. ValueStir is also seeking your input on listed, unlisted, or upcoming stocks and crypto assets that you'd like us to investigate. If there's a name you believe deserves the spotlight, leave it in the comments. Your suggestion could become our next story. This was ValueStir.